Hello, everybody, and welcome back to another episode of the Rogue Agent Answers. My name is the Rogue Agent. Some people call me David Lewis, and every week I answer one of the many life insurance related questions that I've received from clients, from email subscribers on the daily email list. Questions floated to me from across the interwebs in the comments section, which I know you're not supposed to read, or just interactions that I've had with people in real life over the past 20 years, which is a long time. And some of these questions I just scribble down on scrap pieces of paper. Some of these are stuff I've written down on my phone. Some of it is on Post-it notes scattered all over the office. And every week I answer one of those questions. So if you'd like to ask your question, drop them in the comments section or join my email list for more life insurance tips and advice at monogenics.com. monegenics.com. Also, keep in mind that nothing in this podcast is or should be construed as financial investment, legal, or tax advice. In fact, nothing that I say in this podcast should be construed even as insurance advice, as I don't give individual advice blanket just across the internet, unqualified, to random strangers. So if you need any of that stuff, contact a licensed professional that you know, like, and trust, preferably someone licensed in your jurisdiction. And now for this week's question. Do I have to buy paid up additions with my policy dividends? Short answer is no. Although I guess you could do whatever you want with them. You do have several options. Most people do buy paid up additions. That's the default option. And most carriers will set that as the default option for your policy. So you don't have to, but that is the default option most carriers set. This option increases your policy values by using dividends to buy additional paid up life insurance. The paid up insurance comes with its own cash value and death benefit, and then that it's almost like a mini policy. It's a single premium policy that gets stacked on top of your basic life insurance coverage, and it along with the death benefit and the cash value, it generates its own dividends, which then accumulate and can buy more paid up additional insurance. So that's kind of the interesting thing about that option, is that it sort of feeds itself and builds the policy bigger. The second option is premium reduction. So dividends can be used to reduce your premium payments. Not many people do that. I have seen this mostly on older, maybe I shouldn't say the company. There's a company where for whatever reason, a lot of agents, especially the agents in the, I'd like to say the 1990s, early 2000s, they used this option on this particular carrier's policies, and so a lot of times when I see the policies from there, that I see it's going to reduce the premium, and it just drags down policy performance. And I'm not sure why agents do that, but for a while this was like a fashionable thing to do. With one carrier in particular, and I've also seen it on some other carriers. Third option is to have your dividends paid as cash. Not very useful unless or until you decide you want to start taking money from the policy as income. Lesser known option is dividend accumulations. This is where the dividend sits in the insurance company's interest-bearing account. Not a very attractive option. It earns current interest rates, what are called new money rates. The interest is taxable because it's no longer inside the policy. It's almost like putting your dividend payment into a high yield savings account. Not really much to it. Some insurance companies, they also let you use the policy dividends to pay down any outstanding policy loans. Usually this is not an official dividend option. It's more like, we allow this by current company practice, although most of them will not disallow this. I've never had a company say you can't do it. It's not a contractual right, again, but insurers tend to allow it anyway. So those are your basic dividend options. You can change your dividend. Usually, change your dividend options at any time. Although usually you are not going to deviate from the default option. There is one exception. Maybe I should backtrack a little bit. There is one exception where carriers or where agents will select the option to use the dividends to reduce the premium payment, and that is when you use an option called it's the dividend option is really a premium offset. So you don't necessarily change your dividend option because you're still buying paid up additional life insurance. But what the carriers have come up with is something that looks like a dividend option to reduce the premium payment. What's really happening is they're using what's called a dividend offset or premium offset, or not dividend offset, but premium offset. So what they'll do is use accumulated dividends in the policy to pay, existing accumulated dividends to pay the current base premiums. If that's not enough, they'll start using dividends from the current dividends, whatever the current dividend is payment to. So it's accumulated plus current dividends. And really that's, that way you're not changing your dividend option. You can actually have a situation where you can keep buying paid up additional life insurance with your dividend options and then cashing them in to pay the base premium, so you don't have to actually change your dividend option. Usually that's done at an older age, in your 60s, 70s, sometimes 80s, when you've been paying premiums for 20, 30 years, 40 years, and maybe you just you're tired of paying premiums, or maybe you want to start taking income, or your income is lower and you want to have more income, so you don't want to keep paying premiums into your policy. You want something out of it. So that's usually when you see that option being elected. But anyway, those are your dividend options. I hope this helps, and I'll see you in the next one.
Okay, that's it for this week's question. If you'd like to add your question to the list, just drop them in the comment section or send me an email. And if you want more life insurance tips and advice, just head on over to monogenics.com, MONEGENIX.com, and sign up for my daily email list.